which has had like more than 4 million views so far. Also, I'm a contributor to forexstreet.com, very famous Forex Street website, and I do real-time trading. So both Chris and I, Mr. Chris Svorcik, he's also full-time trader as me, and he does wave analysis also. So before we begin, I want you to know that you're at the right place because we are trading with Admiral Markets, which has been the most successful Forex broker in 2015 by UK Forex Awards. So before we begin, we have a small risk disclaimer. Well, it's important to say that you know all that trading losses can exceed all of your deposit. So this risk disclaimer can be also found on our website, admiralmarkets.com or admiralmarkets.co.uk. As you can see, this was UK Forex Awards, so we were the winners for Best MT4 Broker, and also additionally, we were nominated for Best Speakers on forexstreet.com and Best Sell-Side Analysis also on their respective websites. But well, that was the first year we have ever been nominated so far, so we are proud of it. Every single time we made any analysis on Admiral Markets website, it will show pre-fact analysis. So our own purpose is to teach you how to trade, but actually you need to know how to trade by yourself. So we are actually teaching you how to fish. And the main thing is to be honest with both yourselves and with you. And because of that, we are very unique. Now, this is not the marketing, this is the fact. We always do pre-fact analysis. So when you see the analysis, it's not about what market has done so far. It's about where the price might go, where you can make your entry, and where are the potentials for your profits. And every single time on our webinars, especially session recaps, which are held each Monday, you will see results from previous week and current week setups. So we always keep it to yourself also that you can see that we are very honest with results. Also, we are very proud to say that for every one of you who are interested to come in and teach and trade with us, we can show our real live statements. So we are not just blah blah, we can prove for everything. So this is what we are going to talking about. We'll be showing you the analysis, then Chris will take over. I will be then taking over from him, showing you some simple yet effective price action trading strategies that are very unique, such as master candle breakouts, and that will be also included in Marubozu high momentum trading. So that is pretty much very unique because I created myself back in time. And then we will talk about trade management. Then it's very important for you to know about trade management that it doesn't matter which kind of system you use. Because if you don't have a trader's mindset, you will always lose, believe me. Because I know that from personal experience. The thing is, forget about all those telltales that you will make 20% per month consistently and you will become millionaires over the night. It's not possible. Unless you have a lady luck smiling upon you, and probably you may become. But if you want to be a professional trader, you need to understand that you're a marathon. You're a marathon runner. You're running a long distance run. So you're not a sprinter. It's not about being profitable 1 month, 2 months, or 3 months. It's about being profitable for whole of your trading career. And you can achieve that ultimately by a proper risk management. So we will talk about it, Chris. You may continue. Okay.
No, let's see. I think that maybe the background. Yeah, it's good. Okay, thank you so much, everyone. Thank you, Nenad. So yeah, we're going to talk about analysis in my part. As you can see, this is the flow of how we look at the lifetime of a trade, and it's a 6-step process. Basically, we're going to talk about the first 4. We've got 30 minutes, so we're not going to be talking that much about the last 2. So, but first of all, analysis. I will talk to you about that. We see analysis basically in 3 steps. This is just a simple module that we want to keep trading simple, and analysis, of course, is important, but we don't want to over-analyze. We don't want to do too much of it because then you get paralysis analysis. So we like to keep things simple, and we basically focus on these 3 things: trend, what kind of stage of the market is it? Is it trending? Is it reversing? Is it ranging? Then we take a look at support and resistance to see at what point the market could turn, when could it continue, because of these important levels, that's when actually trends could have a struggle, could stop, and potentially reverse. And we look at patterns as well to see, from what point of when could price show continuation through bear flag, continuation patterns, or reversals like head and shoulders. So we look at these three steps and we put it together, and we get a roadmap, basically. We get a trade plan derived from these three aspects. So we're going to be talking about some aspects of these 3 points, and then Nenad will continue with the trading strategies that he mentioned just a second ago. So first of all, the trend. Now, we use a mix of moving averages and channels. Channels are great because it gives you a good opportunity to connect the dots in a way, connect the highs and the lows, and you get beautiful, beautiful pictures in a way. You can see a few of them here, and they look very neat. They capture price action very nicely, and especially when you get to the top of the channel in a downtrend or the bottom of an uptrend channel, it's a good moment to look for opportunities to trade. So obviously, there are some rules that help building these channels. 3 hits, having a good angle of the channel is very important. And sometimes price can go through the channel a bit. It doesn't have to be that precise that all price action fits within it. I think it's a bit of a loose practice. Yes, it's good to have a few rules, but I don't think we have to get over fixated on the exact dimensions of it either. There are some disadvantages. Sometimes you don't see the channel on the chart either. It's not always visible. So it's something that if it's clearly in our path, yes, we draw it. If not, we're not going to keep looking for it forever. So channels are useful for trends. Use them when there's opportunity to do so. If not, then there's always the backup of using moving averages, basically. They're always useful because they're dynamic. They go along with price. You don't have to change anything. You don't have to draw anything. Whereas trend channels, it's static. So it always has the same angle, and sometimes it doesn't really fit in price action. Moving averages always have a value. They're always on the chart. They'll always be recalculated automatically. So we like that to have on the chart. This is basically just very simple to see where price is aligned with the EMAs. We use EMAs, and basically EMAs are aligned. In the left lower corner, you see medium, short-term moving averages, and long-term. And it's pretty simple. I mean, if price is below the short is below the long, you have a fluent, a nice trend going on, and it just says a lot of information. The space between the EMAs as well. And when price goes back to those EMAs, you're looking at a retracement or pullback, and those are interesting opportunities to perhaps join the trend and continue with that trade if there's no strong support or resistance, which we'll talk about in a second. Now, you might wonder which EMAs we use. Basically, I think that it's not a precise level that is the best. I've seen studies that show that EMAs are profitable, really no matter which ones you use. But we do have some preferences. It's maybe just our own little preference for 21 and 144 for myself. Nenad likes the 20 SMA and the 89 EMA, just for informational purposes. But really, I think it's about the zone. Anything between 20 and 50, I think, works fine as a short-term. Long-term, anything between 89, I would say, and 200 is really perfectly fine to show both sides of the story here, short and long-term. All right, so basically when you see price moving away from those moving averages, it can go pretty fast. You got momentum driving price, which is really all about candles going in one direction. You got bigger size candles pushing in one movement, one direction. So you see the candles are bigger in that direction. You see the closes of the candle near the low, for instance, in the down move. You see the other side candles, so if we have a downtrend, you see the bullish candles being small, corrective, and you typically see that those momentum candles are bigger as well. So those are typical of momentum parts, and correction is actually where the candles are mixed. They don't close near the high or low, and there's an indecision in the market. So momentum typically pushes away from those moving averages. When the moving averages are aligned, it moves away from the moving averages. You can see in the top lower corner there, you got the short term below the long term, and then price started to really fall away from these moving averages to the downside because we got bearish alignment. The short term is below the long, and you can see those candles really pushing lower, and that's momentum. So we like to use momentum and correction to understand, okay, momentum has happened to the downside in the past, we get a correction sideways, there's a good chance that momentum will continue again down or up, sideways and up. So momentum and correction help a lot with understanding the market structure as well. Now if we tie that together, there we go. No, first of all, sorry, we're going to take a look at the lack of a trend, probably just as important because trading, we like to trade with the trend, we like to trade with the momentum, and at times there are going to be currency pairs or other financial instruments that are not trending. So how do you recognize that? At what point do you say, I'm going to skip these currency pairs or instruments because it's not, you know, it's just going sideways? Like for instance, the right upper corner, you can see consolidation market just quite choppy and whipsaw-y. And one simple rule we use is just like, are the moving averages touching each other? Are they overlapping? And you can see the short and the long term just constantly kind of like hitting each other. Well, that's then an area that for us is not interesting. And we say, okay, cross it out. You know, moving averages are not showing a trend, alignment here, and this is a consolidation. Now, for some traders that are range traders, it could actually be interesting because you trade the support or resistance. So it depends on what type of trader you are. We like trending environments, but if you like ranges, then you could use those sideways zones for potential bounce trades, I call them. But we like the trending environment, like for instance in the lower corner there, as you can see a clear downtrend, clear movement below the moving averages. So yeah, in this case you can see basically price in between those moving averages in the right upper corner, and in the left, right lower corner, you can see also some consolidation zones marked by the orange trend lines. All right, so this is just like a lack of trend here in the right side, and how you can spot when that happens. Okay, so we talked about trend now. So we talked about how you can spot trends very, very quickly, I know, but still you get an idea how we do that, and how you can see if there's no trend at all, basically. So that's the trend part. So when we have an idea, okay, this is, you know, this currency pair is trending or not, that's the first step. But then we go further with our analysis and we take a look at patterns. Is there something that's showing us some information regarding candlestick patterns or chart patterns, for instance, right? In this case, you can see there's a bit of a channel to the downside, but prior to that channel, there's a clear impulse, momentum, upwards. So you got momentum upwards, and then a corrective channel down, which some call a bull flag, for instance. So we note that, we see that market pattern, and we take that into consideration when we make our trading plan. So in this case, I actually took two trades. One was a loss for 34 pips. The other one was a gain for 96 pips. And basically, I traded the first one at the resistance of that channel, anticipating a continuation of the channel. Didn't happen, and I took an hour later actually the breakout of that channel to the upside, which was successful. Now I'm not saying that it's always good to take two trades after each other, but this is just to give you an example of how you can trade the patterns in different ways and basically benefit from patterns in your analysis. And you can see also wave patterns is part of it. It's a bit more complex. It ties impulse and correction into a story. I know that some do not like wave analysis because it's a bit on the complicated side, but basically it's actually just a story that says, okay, this is what price has done, and it made a correction here and an impulse here, and it tries to tie them together and make an explanation of what could happen next. So it basically looks at impulse and correction and labels them. That's what it does. I'm not going to dive into that here. We don't have time for that, but these are some of the patterns you can look at in the market that happen very, very regularly, and you can use that for analysis. Then we look at support and resistance. At what point could the trend or pattern stop, right? So this is the last kind of piece of the puzzle that we use to understand the market structure. And we use, you could use any of these things. We like Fibonacci, we like trend lines. Of course, there are, a lot of ways to look at support or resistance, and maybe you have your own, and that's great. For instance, in this screenshot, you see the 50 fib, the purple circle there around the 50 fib, and it's a very strong zone. You can see price does not break through it, respects it, stops there multiple times, and eventually it does continue to the upside. You can see on the left there was momentum to the upside, right? So we had momentum there. We had the correction sideways. We had the support and support stopping price. We have basically a consolidation box as a pattern, and then the trend continuing upwards. So if you look at this screenshot alone and think about all those three things, the trend is up because we got momentum to the upside. We don't see much of the chart, so we don't see how big of a trend it is, but okay, with the information we have here, it looks like we're making a higher high and a higher low. We have momentum to the upside, so we got trend, right? The first part covered, trend up, momentum up. That's the first thing. Second, patterns, consolidation box going sideways, showing that the upside is still dominant because price is just consolidating. Pattern. 3, support and resistance. We got a 50 fib stopping price. So on this chart alone, we tie these 3 things together and we can see how they all play out and work out. And simple things, simple 3 steps can make you understand the market structure on this time frame like no other. And you can just read the charts and read the patterns or understand what's going on with that currency pair or instrument. And you can make up a trading plan like that. So I think that that shows the value of these 3 steps and keeping your analysis simple but rich at the same time. All right, so basically, quick conclusion. We're here to determine the most likely flow of price because it's like the river that is going through the bends and it's making different twists and turns. And price is no different, really. If you look at price in the same way, it's just a comparison of energy, momentum versus the resistance, and which one is stronger? Is water going to push through, or is it going to actually respect the natural, bends and bend along with the rock? So if you look at price, it's always that battle between that energy and that resistance, and that's basically, you can see the energy is the trend and the momentum and the patterns is as well, and then we got the resistance, the rock basically being those support and resistance levels. All right, so there's a lot of text maybe on this field, but I would want to highlight the fact that the energy is momentum and the rock basically is the support and resistance, and that's how we look at that chart. So let me move on here and give Nenad the word. He's going to talk about strategies.
Thank you. We need sound. Okay. Okay, so guys, let's continue. What is PNT? PNT was my personal method that I have developed back in time, and I was trading that in 2008, 2009, 2010, and that is an abbreviation for practical naked trading. So basically that was a price action trading method. It was not a system, because when you say system, it's like you're talking about something very simple but not effective. So method is exactly what a system should be. It's like 4 systems in one thing. So that is a method. Practical naked trading was very complex, and later during next 3 years I have developed my personal method called Camarilla MACD. So if you visit our website, you will see every single day the analysis with clear possible entries, rejection of price, and target. So that is Camarilla MACD, an advancement of practical naked trading. Now today I will show you how to actually trade candlestick high momentum. So you don't need any indicators. This is actually one of my personally preferred methods to trade high momentum, and it's done on simple price action chart. You don't need MACD, you don't need any moving average. And I will just refer to what Chris has said. Basically, guys, you want to trade with the trend. Now, I'm talking from my personal experience. If you go with the trend, you will follow big fish, shark. We are all small compared to institutional funds, compared to central banks, to commercial banks, to companies. They move the markets. We need to follow it. So if you watch, for example, small fish eating what's left of big fish, that is what we do. Because you need tons of money to move the price by a single pip. It takes hundreds of millions. So we cannot move it by ourselves. So we need to follow. And we don't need to follow the herd, retail traders. Our goal is to follow institutional traders. So you want to trade as banks trade. Because when you apply a strict money management, when you apply a good system, and when you have a proper trader psychology, you will definitely succeed. But it always comes to proper money management. As soon as you cross your risk, no matter how good you are, your account will be margin call sooner than later. Believe me. So candlesticks through breakouts is also a second part of my presentation, and it will show how to distinguish true breakouts from false breakouts. With again very simple method that I developed back in time, but well, now today I also take some trades. Those breakouts cannot happen all the time because those are true breakouts. But the point is, the main goal is to filter up bad trades. So when you see a true breakout, there will be like 75% of a chance that your trade will succeed. So the first slide, okay, I showed already master candle, candlestick high momentum, candlestick start pin. We can, because of time, we can move on. Okay, method which is used for both analysis and trading. Because if you are an analyst, I am an analyst. So is it a little bit awkward that I don't trade? I don't know how many analysts are there and are they trading or not. It doesn't matter, but I do trade. And for last, let's say, 7 years, as I said, I've been full-time trader. So everything that I do the analysis for, I try to trade. But I need to be focused. So more or less, those are the same trades I take on my own account. This method can help you in your trading decisions. At least you will learn today something solid, something concrete, not just a theory, but the thing that can help you in your trading decisions. It's pure price action, so we don't use any additional indicators except for Fibonacci retracement. That is our, I can say, most favored tool, because Fibonacci numbers are mentioned everywhere. Unfortunately, guys, we don't have a lot of time. I would love that we had a whole day. I can talk with you, but unfortunately we cannot. So just needless to say that Fibonacci is the best tool ever, because Fibonacci numbers are also shown in the universe. Now the main principle of Fibonacci, if you watch it from the left to the right, because you always want to watch the price from the past connecting to the present to give you the future results. So you will see 1 + 1 = 2, 1 + 2 = 3, and so on. That is those Fibonacci sequence and numbers are basically connecting past with present to give you the future outcome. And whole our universe is 61.8 Milky Way. So now we will talk about concepts of using just technical patterns, because we don't have time for pivot points, but technical patterns for our high momentum trading. Now, momentum is basically how much a price fluctuates over a period of time. Okay, so that is the amount of uncertainty or risk involved with the size of changes in a currency exchange rate. For a trend to happen, we need to have a momentum. But before trend happens, we always have momentum. What is a trend? Most simply explained, trend is a series of thrust and pullback. Thrust and pullback. Uptrend. Same for downtrend. Thrust and pullback. Thrust and pullback. So basically, if you want to trade successfully, my advice is to always try to sell higher and buy lower. That is the main principle of Camarilla MACD and practical naked trading. As we always want to trade in the zone. We don't pick, for example, when we trade, we don't trade when candlestick close, because when candlestick closes, it's just a confluence, but the price has already moved itself. The smart money has already moved the price. So we want to be at the same time. So we trade living candle because we trade in the zone. There is a good book, Mark Douglas wrote the book. It's called Trading in the Zone, and you could read it. It's one of my favorite books. It's very good. So you can go for it. So fast change of price during short time, magnified by the use of leverage. So momentum is always magnified by the use of leverage. Currency trading brings a high degree of volatility. You should know that. But we want to exploit volatility to our advantage, not to our disadvantage. And volatility will bring you trend momentum. So think about it. When you have high momentum, you already are in a trade. So you just want to follow trend. So you are the first who will trade that trend. You are not a late runner. Okay, so this is how we go. Open 1 hour chart. Look for Marubozu candlestick. I will show what Marubozu candlestick is. Draw Fibonacci in candle direction. So if your candle direction is from the bottom to the top, it's 1 candle pattern. It should definitely be, and always, from the bottom to the top. For bearish Marubozu, you go from the top to the bottom. And it usually happens after a breakout of important support resistance level, and we can scale in. Now, fortunately, if you don't know what scaling in, I just can say, we don't have much time, that is adding to position. Because when you trade with a trend, you can scale in. Basically, you're adding to your successful position. We can continue with next slide. This is bullish white Marubozu candlestick. So, look at this, guys. This is what you will see occasionally, I don't say every day, but if you compare all currency pairs, probably you will see it a couple of times per day. We do it on 1 hour because 1 hour is a compromise between scalp swings and intraday positional trading. Sometimes it can be carry over to next day. So this is white closing Marubozu. Chris, just slide before. Yeah, this is white closing, this is white opening, this is simple white Marubozu. The only difference is the wick. Now, in my teaching and in how I teach people, this is more important than body, but we will leave it for another way. You should visit Admiral Markets webinar. So I will teach you why this is more important than real body. And bearish Marubozu is exactly this. So these are 3 types of Marubozu candlesticks, and they indicate strong momentum, either strong buying or strong selling into the market. Okay, so this is very simple. Everyone can do that. No matter if you're experienced or you're a novice trader, you can do it by yourself. So look at this. This is a huge Marubozu candle, huge. So where do we want to take the trade? Assuming that the trade happens in like next let's say 10 candles or 10 hours, we can trade this momentum. Because when you see this chart, this is the most important candle in the chart. This is where smart money started to buy. So the price was going here, we could see probably some profit taking, and here smart money started to buy. So you want to buy at 61.8, 78.6 or 88.6. So you need to add both 78 and 88 to your charts because they are not naturally displayed on MT4. Okay, so you need to add 78.6 and 88. Those are 2 most important numbers, at least for me, because I've shown really a lot of times successful trade bouncing off from 88.6. When majority think that it will be a reversal and they enter a late short trade, we actually want to buy here. So you can check my latest dollar CAD analysis when I said, guys, go short from 35.85, and everyone was thinking that it will go up. Well, it came to our zone and it dropped for more than 100 pips. Okay, same here. This is a bearish Marubozu candle. See, smart money again. Simple. Big momentum. Marubozu candle, we can neglect this now. We can focus on this one. So we actually placed from here to here because this was swing high, this was swing low. Look at this. The price exactly went here, rejected. Look at this. Went here, rejected. Went here, rejected. Went. So many examples. This is so simple and so good because in Forex market, history repeats itself. Compared to other markets, let's say equities trading, indices, this is much easier. Indices are a group of stocks, and because of that, we don't have a clear support and resistance. And trading indices is harder. In Forex market, we connect historical price action with now moment price action. And that is the real beauty of Forex market, those waves, those repeatable patterns. You can watch it all the time, same things happen over and over again. Another example, look at this, 78.6, perfect rejection, almost to the pip. Again, 61.8 rejection, look at this, 50, 30, then again 50, then 38, small consolidation. Look at this, almost close to 88.6. Just because of this strong momentum candle, Marubozu candle. So, just get me back to the slide. So guys, if you ever see that 1 hour candle has, let's say, from 30 pips to, let's say, 100 pips in itself, you can assume if it's like this shape, with or without, you can assume this is momentum candle and you can actually try to open a trade. I advise you to trade on demo account to get accustomed to this, but it's very easy. Another thing that I will show is master candle. Now, this is also a concept from our practical naked trading. And what is a master candle? You don't need to be a technical analyst to actually draw current support or resistance levels. You can just compare it to master candle. A candle's high-low, which engulfs next 4 candles high-low. That is a simple mother candle or master candle. We will see true breakout concept, and we also do it on 1 hour time frame. So, how we define master candle? Okay, first, second, third, and fourth candle within the master candle are called setup candles. Then, a first, second, third candle after the fourth setup candle need to break master candle high-low for the breakout to be valid. It's not that hard, you will see. It's just a lot of text, but it would be good that you can take a picture, snapshot, because these are basically the rules. So, fifth and sixth or seventh candle after master candle are actually our entry triggers. Valid master candle has 40 to 100 pips range, same as Marubozu, right? Depending on the pair traded, because we trade momentum and breakout together, right? If you want to make a breakout trade, you need to have momentum. You cannot make breakout if market is ranging. You will get like EMA crosses. Your account will be just in a drawdown, unsuccessful buys and sells. So you only trade when candle has made a valid breakout. Buy sell entries place 3 pips plus the spread above or below master candle high or low. Okay, so it doesn't matter what pair you trade. This is price action. It's not subjective to just euro, dollar, pound. You can take CAD yen if you want. Okay, now no trading if the price is close to important support resistance level. So if you see that this is the ultimate support, and if you see that candle wants to break it, well, even then I wouldn't trade it because it's not logical to me. I don't sell support. I just buy it support, not selling it. Okay, no, this is master candle. Okay, this is a candle. Candle low, candle high. And now count the candles after this candle. 1, 2, 3, 4. All 4 of these candles have been engulfed in these candles low and high. So we call it a master candle or a mother candle, it doesn't matter. And all these candles are waiting for a true breakout. Now, yes, you can move on. Okay, here guys, okay, see, now, 1, 2, 3. Next 3 candles should break the low or high, doesn't matter. We take the real breakout. This was the signal for a real breakout here, because price is broken 3 pips below the support. So actually we are expecting a real breakout in course bearish direction. Of course there will always be some consolidation. Then you need to apply your money management. Stop loss goes above this candle's high in this case. So my advice is calculate 0.5% of a risk. When you take the trade, don't take trades more than 1% per risk per position. Remember that, because as soon as you cross 5% of threshold, you will be in danger zone. Your account will be in danger zone. That's the truth. Forget about 20% per month and those things. Be realistic. Don't be greedy. Okay, so this is it. Candle broke here. We had some consolidation, and look at it now. Look at this. High momentum candle, huge. Look at this, if you go like now Marubozu candle, high momentum, you could take another trade here and just drive the price with a single momentum. So that was a true breakout that actually happened here, and this was real momentum here. Okay, we have also 2 more examples. Look at this candle, it's so simple. 1, 2, 3, 4. First, second candle made its break. Now, it broke to the, I'm not so tall, it broke to the upside, so like 3 pips. And pure momentum could give you 40 pips on this trade. Pure momentum trading. Now, you obviously need to babysit this trade and these type of trades, because breakouts are simply not to be traded like positional trades. In Forex market, you have possibly 4 or 5 different ways how to trade the market. Positional trades, breakout trades, scalping, and counter trend trading. This is breakout, so you need to be fast and nimble with your fingers. Another candle, master candle here, high, low, 1, 2, 3, 4. First candle, doji candle, indecision. Remember, this is indecision candle. You just cannot simply assume where the price will go. That is why you think logical. You don't know, this looks like a potential downtrend, but it's more like a range. So you don't want to have a bias. You will follow the price. This is your valid breakout. Look at this. Again, straight to the upside. So use this, guys. If you need to snapshot we can give you like 10, 15 seconds. Chris, what do you think? To snapshot the previews. Yeah. So you can take picture, because those are the rules. Two simple rules. Now, this is all a part of practical naked trading. Practical naked trading is a part of price action trading school that I do every second Wednesday on admiralmarkets.com. You can freely join. It's free for you. And because of Admiral Markets, all of this method costed like 3,000 to 4,000 euros back in days. Now it's free for all Admiral Markets visitors, because that's simply because I trade with Admiral Markets. I have 5 different accounts, and all have been placed with my favorite broker, really. So you come, ask whatever you want. I will respond every question. Ask me whatever is not clear. I can do it again, no matter how many times, because I want you to learn to trade as both we do, successful and professionally. Okay? Now, Chris, you can continue. I hope that you enjoyed. If you have any questions after the webinar, don't hesitate to ask me.
Yeah, folks. Yeah, sorry about that. I know that we're running out of time, unfortunately. We still had a small part actually on trade management. I will have to be really, really fast about that. I know we're throwing a lot of info there at you, maybe a bit too much, but trade management, we use take profits, pivot points, Fibonacci targets, and we use a mixture of pending and market orders. We sometimes trail the stop loss as well when a trade takes long to develop. If it just takes too long, we have specific time rules that you can check out on Admiral Markets YouTube channel as well. We talk all about those things as well. And basically, we kind of use this pattern with trade management. We try to be patient at the beginning of the trade, give it time, because you can't be too demanding at the very start. But then if it takes too long, you don't want to be waiting forever and ever. So you can become a bit more demanding with the trade as time goes along. Once again, take a look at our webinars, because we don't have time now, unfortunately. But then we become a bit more patient again when we move to break even and reduce the risk, because we want to also have the ability to let the trade develop into a bigger run. So our goal at the beginning is patience. Then we try to reduce the risk, and then we try to let the winner run and give it a chance. So that's basically the philosophy that we use with trade management. And it's a bit fast, I know, but that's all the time we have. We have a bit more patience with bounces, less with breakout, what Nenad already said, because they tend to be either fast, quick, go right away, or they just fail. So you want to be a bit more demanding and not so patient with breakouts. So once again, if you want to take a look at our content, analytics, webinars, check out the MetaTrader 4 Supreme Edition. There's 60 extra features that Admiral Markets has for MT4. We won the Best MT4 Broker Award last year, so take a look at all of this good stuff here. We hope that this seminar has helped you. You were able to see how the trends, patterns, and the support of resistance helps with analysis. Nenad gave you breakout and pullback strategies using Fibonacci and the breaks of highs and lows. And very quickly about trade management, unfortunately we didn't have much time for that. But you can check it all out and more, because we got webinars from Monday to Thursday, analytics each day, admiralmarkets.com. So we hope that you find your home at Admiral Markets on the website, and you enjoy trading with Admiral Markets, and it makes you a pleasurable trading experience. So thank you so much for your time.